Boom. All right. It says we are broadcasting and recording. Welcome, everyone. I'm Alon, and I'm one of the founders of Security Tokens Summit, but I've been in this space for a very long time building technology for online fundraising. And I wanted to get this crew together, and actually, I was thinking about it over the week, and I know I still need to introduce everyone, but really quickly, I was thinking about it over the week because I was just telling everyone on this call before we went live that I already want to do this weekly. So hit me up with ideas for names of a recurring thing. My current vote and thought is Security Tokens Uncensored, where we just answer questions, whatever you want to know about the space, the good, the bad, and the ugly. I think we've got a really great first crew for that. If you're in the Zoom software already, all right, it looks like the chat is already bouncing. Whoa, dang, there's a bunch of participants. It just updated for me. So thank you all for coming. Ask us questions in the QA area, because if you ask me in the chat, it'll be harder for me to mark them and do all that stuff. But let's first, before we dive into questions, I'll give you guys some time to ask questions. Let's go down the list. I'm just going by the order it's showing on my screen here. Henry, why don't you quickly tell us about, well, first I'll just say we've got Henry Elder here from Digital Asset Advisors, Amy Wan from Sagewise and Security Token Academy. She also has a really great podcast called the Law and Blockchain podcast, right? The Law on the Blockchain. And Marc Boiron from FisherBroyles. He's an attorney and an expert in security tokens and blockchain law. So we've got two law experts, but Amy is also the founder of Sagewise. So we've got lots of perspectives, and Henry is actually mostly focused on real estate security tokens, but he's got a really great background and understanding of the space too. Henry, why don't you start and give us a brief background?
Yeah, definitely. And I think I'd like to throw into the hat security tokens #NoFilter, so we can really bring in all the millennials.
No filter. But I did turn on the beautify effect that Zoom has.
Oh, sweet, I need that.
I did.
So yeah, my name is Henry Elder. I have been working in real estate for many years and many generations previous, and jumped out of the more traditional real estate space and into the blockchain in 2017, and spent a lot of time in 2018 tokenizing commercial properties here in the US. And now in 2019, focused on a couple more deals that are coming down the pipeline, a couple of great clients like Quantum RE, and one that we've got coming down right now that I'm excited to announce that you actually saw us with yesterday, Alon. And
all right.
Yeah, just out here educating and teaching people about how these things work.
Very cool. So, Amy, you have a great background in this space, starting from the crowdfunding world and understanding the rules and laws behind this stuff. But you also have your own company, Sagewise. I would love a quick intro about you.
Yeah, sure. So it's actually even before the crowdfunding days, I think. I started my career in federal government doing regulatory affairs. And then when I moved back to LA, I was general counsel of a real estate crowdfunding platform, and then partner at a boutique firm where all we did was securities transactions, crowdfunding deals, things of that sort. Now I do a couple things. So one of them is I am a consultant and host for Security Token Academy, and that's actually what this panel is born out of. We had a fantastic meetup last week with all of the panelists here. It was a packed meetup. And actually those segments from the meetup will be airing on our Security Token Insight show, which airs basically every other Tuesday on the website. I am also founder of Sagewise, which provides dispute resolution and investor support services to security tokens. And last but not least, at the end of last year, I actually started my own podcast for the first time. So I've been listening to podcasts for a long time. This is my first time actually producing them. And so we basically talk about anything at the intersection of law and blockchain. So we have everything from, e-signatures on blockchain and the legalities around that, all the way to, we have an upcoming show on crypto asset inheritance and estate planning. So I think that's a pretty relevant topic right now, given the news that's been happening around exchanges lately. But yeah. Thanks so much for having me.
So yeah, when I was setting it up, part of my notes was to mention the panel that we did together. So a group that, if you're watching this and you're probably already familiar with Security Token Academy, if you're not, go check them out. I think all of us on that panel and separately have been on different shows of theirs. Amy, of course, is a host there and much more involved than just being a host as well there. And it's really, really, really great content. And this, this was a bit born out of it, right? So I got really excited because we had a pre-conference call for that panel. And normally panel calls are really boring if you know the behind the scenes stuff. It's, that people want to pre-discuss what they're going to discuss, and to an extent that's really important, but they really want to dive in too far, and then you're like having the same conversation on stage again and it feels stilted and weird. But the call with them was awesome. It was a lot of fun, and I kind of wish that we had recorded just that call. So that's where I kind of got excited to do that. And then when we had the event, there were just too many questions in the audience to answer at once. And we also have, if you know Security Token Academy, really professional lighting and video, and everything is top tier, really, really great. So you also feel a bit maybe too polite to interrupt too much, because you'll probably kill the great content they're creating. So I feel like in this space, especially amongst friends, we could have a lot more fun from that perspective. But you definitely need to watch that, because Amy did a really great job asking questions and getting it right, and the audience was great, and most of them asked really great questions. I purposely threw that in to give shit to the one guy that I gave shit to live at the thing. If he sees this, he'll know I'm. So Mark, let's get Mark. Mark, I want to hear your background a little more. If you don't follow Mark online, you should. I'm in a bunch of the, a lot of us are in the same Telegram groups and things like that. And Mark has always had really great content. I'd always been in touch with him online, but until recently, we didn't really get a good chance to hang out and meet in person. I'm really glad we did. Mark will be speaking at Security Token Summit as well. I know that Amy and Henry will be involved in Security Token Summit and CIS as well as speakers and moderators, working on all sorts of things together. But Mark will be there. His full disclosure is his company FisherBroyles will also be a sponsor, so you've got to check them out. But Mark, give us some background.
Sure. Thanks, Alon. So yeah, I'm a partner at FisherBroyles in the blockchain practice. My practice for the last 2 years has been focused in blockchain and pretty much exclusively in this space. Most of that is helping companies, tokenize assets or their equity. The other aspect of that is just typical crypto work, whether it's fund work, or other issues with mining operations, things of that nature. Before joining FisherBroyles, I was at Rutan & Tucker, where I started the blockchain practice over there. And I was a kind of securities attorney before joining FisherBroyles, and have been for a while now.
Cool. I know, so I'm going to start there. We have a couple questions starting to come in. We have a ton of participants coming in, which is awesome. You've been on a bunch of teams, right, doing this stuff. You've been a part of a bunch of deals now. Do you see the pipeline growing for security tokens now? I mean, there's a lot of people who claim a bunch of stats or claim that there's going to be tons and tons of these things. I would like to see from your perspective, because you're kind of first line of defense to see who's qualified. Because if you don't hire an attorney, you're probably not going to be a qualified good deal. Like, when I'm thinking of qualified, I think like from an investor's perspective, like if you don't have an attorney or the right attorney from the beginning, it's probably not going to happen in this space. Would love to hear the idea, how it's looking.
Yeah, no. So, I mean, basically, what we're seeing is a huge uptick in terms of the number of issuers that are interested. So I get a ton of phone calls about this. I walk through kind of the potential tokenization, and it's different. I mean, you're talking about sports memorabilia, art, real estate, equity in companies. And most of those conversations end up in essentially that issuer not really being the right person for this at this stage being so early on in the process. And also, if you've got an issuer who doesn't really have much of an investor network, or doesn't want to work with a broker dealer, or is an area in which broker dealers don't typically provide many kind of services in that area, then it's really not going to be it's not going to make sense for that issuer to actually go ahead and tokenize their equity. So the answer is yes, there's a ton of interest on the issuer side. When you get through actually screening those issuers, you got enough to keep a lot of people busy, but you see it dwindle down a lot. And I'm hoping that we get to a point where, the investors know the deals and know what to expect well enough so that when you get issuers that come to you, sure, you're still going to ask them about this or that, but you're not going to need the perfect issuer every time to be able to have a successful security.
Yeah. I mean, so that's a thing we said on the, when we were talking on stage, is just because something is exciting and there's hype around it, similar to when a lot of us were in the crowdfunding space, just because there's this new novel way to raise money doesn't mean that it's right for your company. It doesn't mean it's this magic fix that's going to help you raise money. You do need to be, you do need to fit certain criteria, not just from a legal standpoint, but from an actual marketing and doesn't make sense standpoint. So I'm gonna throw one right now to Amy. Jared asked a good question. It's a good first question. I see Ryan and Hector, you asked questions too. We're gonna get to those, but this is a good first question. Basically, the question is, what are the key differences that make the STO model different from the ICO craze? And what does it mean from an everyday investor perspective?
Yeah, so this is a pretty easy one. The biggest difference is that STOs actually comply with securities laws and any other applicable laws and regulations out there, whereas the ICOs or the ITOs or whatever you want to call them, for the most part, did not. I would say another key differentiating feature is, the idea behind an ICO was that a project was going to be decentralized. There weren't really, folks or a corporation behind it. It was supposed to be a community project, although in reality, I think that has, turned out to not really be the case in most instances. Whereas an STO, it really can be anything, right? It can represent revenue share or equity or debt, or, you could even make tokens with some sort of utility feature, but it would still be considered a security.
Got it. Yeah. I mean, and by the way, we maybe, I don't know how long we're going to need to say this at the beginning of videos and things like that. But when we say security tokens, we also mean digital securities or smart securities, because there's a bunch of people saying basically the same thing with a different term. But we're sticking with security tokens because I think that at least generally most people would know what we're talking about, at least in our bubble. So I'll hit done on that question. That was a great concise response. Hector asked, Henry, I'll let you lead on this, but guys, let's all kind of chime in and all that. But he put, does the security, actually, I'm not sure I exactly understand. So Hector, in the chat, what do you mean by EVs? So he put, maybe you guys know, and I'm just blanking here, but it says, does the security token need to be backed by real things, like say EVs? We know some utility where scams were scams with nothing behind them.
Yeah, it's a great question, because a lot of people they look at cryptocurrencies and utility tokens and Bitcoin and they think, what's backing this? Why does it have value? And then they look at security tokens, and some of them are backed by real estate. Some of them are backed by commodities like gold or platinum or whatever. And some of them are also backed by equity and debt. And those are also sort of, you can't hold equity in your hand. You can't really hold debt in your hand. So they should be backed by real things of value, right? But in terms of them being backed by real property, like real estate, they certainly don't have to be. As long as it seems that the way that it's going is they're either backed by equity or debt, some form of revenue. So a company that is already operating and has revenue, or will in the future be producing revenue and giving you a share of that revenue, or real assets, whether that's real estate, gold, or something of the like. I also don't know what an EV is, so maybe he could clarify that. But
when I read that, I was like, electric vehicles, but which I mean, it's totally possible.
It is totally possible.
Actually, I wonder, there's a really cool company called Testloop that was putting together the Karma token and as far as I know, this was last year, so I don't know the latest updates, but they were going to reward people for sharing their Teslas and sharing the data and doing things like that. So it's not beyond the realm of possibility. Marc, have you seen anything that's a little more novel besides, the equity or the revenue share kind of model for security tokens? Is there anything, or real estate, anything?
Yeah, I mean, there's definitely concepts out there that involve, having nothing backing it. And most of them stem from kind of the concept of utility tokens. The problem anytime somebody approaches me with let's call it a utility token concept that is a security, you run into the issue of how is that utility token actually going to be used in the network when you subject it to various securities laws. And so suddenly you start narrowing down how it is that you can actually use that security token. So I could see a security token that is backed by nothing but could increase in value, but that is used solely to be, staked for some purpose. But even then, if you actually end up, staking it and losing it, you suddenly have this issue where you're now transferring a security, which is an issue. So it's like the perfect example of, there's different things that we could consider with utility tokens as securities, but in almost every instance, you end up in it with an issue of that token needs to be transferred in a way that doesn't comply with securities laws.
Yeah.
And I think you just really have to remember, right? Like, what is the definition of security? There's a whole test around it. And what it really comes down to is other folks putting in some sort of effort and you investing something of value so that you expect to hopefully make a profit, but maybe also make a loss. But I think for Hector's question, maybe what he's really talking about is asset-backed tokens, which overlaps a lot with the concept of security tokens, but isn't exactly the same thing. And in asset-backed tokens, yes, those tokens should all be backed by some sort of real thing, right? Hopefully in the hands of a custodian.
That's an interesting point you bring up, Amy. With asset-backed tokens, are those still securities?
But by the way, that makes perfect sense. Sorry, I don't mean to interrupt, but I'm interrupting. EV means enterprise value. That we should, all of us should have that. But
embarrassing for sure. But that basically equates to equity. But Amy, I mean, for the asset-backed tokens, they're basically still securities, right? I think that's an important distinction to draw for the audience.
In my opinion, I think most of the time they are securities. I think there are instances where they don't necessarily have to be securities. But I think with this.
Sorry, Tim actually just asked, how do you make sure a utility token is not a security?
Well, I think that you would have to make sure it doesn't meet the standards of the Howey test, right? And basically, I think people should not be putting money into it hoping that there's going to be some sort of increase in value, and you definitely should not be advertising it to investors as, you know, potentially you can make money out of it. I think that's one of the most fundamental things.
I think it's kind of been understood now that if you want to have a utility token that's not a security, you're going to have to do one of two things. Both of them focus on shooting down a prong of the Howey test, either the expectation of profit. Usually it's focused on the expectation of profit. And so you'll see a couple things, none of which work. One of which is, you know, a perfect example is what Civil did, using kind of the Brooklyn project in terms of selling, you know, which they refer to as a consumer token, with the idea being, you know, you actually have to consume this token. And, you know, I've always told clients, you know, the problem with selling a consumer token is that nobody's going to buy it. And that was exactly what happened with Civil. Was I think they had maybe $2 million of commitments, which is not bad, but they didn't meet their minimum to actually accept those funds. And I think generally it was viewed as a failure, notwithstanding the fact that the approach to it was right. I think they loosened the approach a little at the end, which might have been a problem, but originally their approach was right. The other approach that you're seeing a lot more is to create more kind of closed loop systems that start looking a whole lot more like kind of permission ledgers than actually public blockchains. And so that's another option, right? If it's closed loop, you look at the expectation of profit, there's no exchange on which you can take it, or you're forced to actually use that token in the network rather than just go sell it for a profit. And in those cases, it's kind of hard to say that there was any kind of expectation of profit if you're actually going to use it, or you have no option but to use it.
Kind of a catch-22, right? Where basically, you know, you need to sell tokens to raise money. People buy because they want to make money, but you have to tell them that there's no way that they're going to make money by buying your tokens.
And probably even go a step further and not just tell them they're not going to make money, but structure it in a way so that they don't. And a lot of people react like crazy when I say that. They're like, what do you mean? You don't have to do that with a typical investment. And I say that that's because you're starting from a different premise here. In this situation, you're starting from the premise of somebody saying these things are made to make money with them. Whereas let's say you're selling, you know, a car, for example, and you want to divide up that car and let people use it. That's like a stupid example, but let's just say, you know, you start from that premise. It's kind of like, well, it depends how you market it. You could market that car in a way that basically says, hey guys, come own 1/5 of it so that you can use this car and we'll share it every weekend. Or you could say, come buy 1/5 of it so we can go list it on an exchange and I'll make money off of it. But in that instance, you're starting from essentially a neutral spot where who knows how people are looking at it. With the utility token, because of the market and how it developed, you're starting from the premises everyone wants to make money off of it. So you're going to need to go to pretty great lengths to kind of get rid of that expectation of profit prong of the Howey test.
Yeah.
I think it all boils.
Sorry,
I just want to add very quickly. I think it just all boils down to what is the person actually buying it for, right? If you are going out and selling these tokens, are you selling to them to real users, and are real users going to buy $1 million worth of tokens or cloud computing or whatever? Like, very unlikely, right? They just buy enough, however much they need. But investors go buy a lot, and it's not to actually use it. It's because they want some sort of return on investment. So I think it all really just comes down to, like, why are people buying it?
Yeah, and actually from the issuer side, there's like an even more fundamental thing that comes into play with this question, which is, and I also see it relates to one of the questions that's been asked in there that I always see, which is, how do we know that the SEC is going to be okay with security tokens? And it comes from the issuer side, where if you're going the utility token route, you're saying these are not securities. And you're trying to do everything you can to make sure that they're not securities. But with security tokens, you are saying these are securities. I'm simply complying with all the securities laws. You're not trying to get around that sort of the securities regulation. So there is no there is no bar that needs to be passed in order for the SEC to say that these things are okay. We've already said these security tokens are securities, and they are going to comply with everything that the SEC says that a security needs to comply
So
with?
this is actually a question by Jared. So he actually asked that exact thing, but just to throw out there and make it a little more of a complete answer. And then I've got one more question on the token side, the utility token side. Just if there is a token attached to a security, does that change the way the SEC looks at it? Because you're starting with a specific deal. Like I think Mark, you had posted the other day that there have been no approved Reg A plus actual security token deals. Has that changed yet? And is the token part the reason why they haven't been approved, or is it just that the deals haven't been approved yet?
Yeah, so there are no qualified Reg A plus offerings, and I always describe it when you see the way these are drafted, a lot of them are focused on a sale of the tokens themselves, which I think brings a lot of confusion when you really should be focused on the sale of the actual underlying security, which in almost all these instances is the equity itself. You're just selling equity. And then as I always say, you're just taking that equity and saying I'm going to move it to a blockchain and represent it by tokens. I don't think I think some of the issue is around the focus on the tokens. I think that gets the SEC caught up. I think the bigger issue is the liquidity that those tokens are intended to provide in a private secondary market that is not very established at all and has very few controls in place. Issuers are doing a good job of, most issuers I think are doing a good job of working with protocols that are built into tokens to restrict those transfers. However, again, the SEC doesn't know how those are going to play out. It hasn't seen what trading on places like Open Finance at T0 is going to look like. So it has no confidence that the secondary market is going to be a confident place in which investors can go trade. And the problem with Reg A Plus is you sell it and immediately after you have liquidity. And so unlike they can't stop a Reg D, although
you have the opportunity for liquidity.
They have the opportunity. That's exactly right. So unlike Reg D, where they really can't stop it, although they have been very involved with broker dealers in the Reg D space selling these, with Reg A, they can. And they can get all the answers they need and they can see how the market develops before actually going ahead and qualifying them.
Well, yeah. So I'm going to just go back to the utility token talk for a sec because Andrew, our good friend Andrew Dix just asked a question saying, I think he's goading us a little bit because he knows the answer to this. Can a utility token trade on an exchange and not be considered a security? Anybody want to hit that?
Sure, I'm glad to take it. I mean, look, if it's a utility token, you right away need to analyze, is it a security or is it not? It's that the fundamental thing that people need to remember about utility tokens is you can have, it's not an one or the other. It's not a utility token or a security token. They're not mutually exclusive. You can have a utility token that is also a security. The second that it is also a security, it suddenly needs to trade on different exchanges than you have something that is just a pure utility token. So what you see, and you could get a pretty good view of what Gemini and what Coinbase, what their inside and outside counsel believes is considered to be a security or not a security. Whether they're right or not is a different story. But you could see that's why they're carefully curating these. And you're not going to see them listing on, right next to Bitcoin. You're not going to see them listing, 22X or Augmate. It doesn't mean Coinbase is not going to have a security token exchange. I'm sure they will, and they're working on it. But it's not going to be trading on the same exchange as a utility token, which can trade on pretty much an unregulated exchange, unless you're talking about futures. Yeah.
But technically, it goes kind of against the spirit of what we were talking about with the Howey test stuff. If it's on an exchange and you're
right.
Go ahead. Sorry.
It gets back to the catch-22 that Mark was talking about. If you sold this thing to investors and they had no expectation of profit and you structured it in such a manner that there shouldn't be an expectation of profit, then what are they trading it on an exchange for?
Well, if they're a utility token and they're an ERC20 token and I have enough of them or even I know the community, the company completely cannot be involved with me listing it on an exchange. I could list it on an exchange even if I'm not involved with the company other than holding the tokens. So is the company responsible now if the whole community comes in and starts speculating around their tokens that they claimed were not an investment opportunity?
I mean, it was one of the problems in the utility token world was that you had decentralized exchanges, and everybody knew that if you had a token sale that was half popular within a minute afterwards, it would be on one or more decentralized exchanges with terrible volume, but increasing volume. And very shortly thereafter, it would be on a centralized exchange, even without the company taking any actions. That goes back to the whole idea of there is a expectation of profit that needs to be considered right up front because of exactly that. But going back to tokens on exchanges, just because they're on exchanges doesn't mean that they're going to be security tokens. What we were talking about when it comes to the issuance of security tokens or of utility tokens and how they might not be considered securities, we were focused on the expectation of profit simply because you really can't have no efforts of others, or in different words, be sufficiently decentralized right upon the initial distribution of your tokens. I mean, that just doesn't really happen. And so the idea is you go ahead and you sell or you do some kind of fair launch of your tokens. And then 2 years later, when you are sufficiently decentralized, they get listed on an exchange, just like you'll see with current tokens like Bitcoin and ETH. They're on exchanges and they're not considered to be securities, not because they're on exchanges and people have an expectation of profit, but because they're sufficiently decentralized or they're not relying specifically on efforts of others anymore.
Could I make a quick analogy just to help illustrate this for listeners, right? So Air Jordans or these sneakers, right? My husband's all into them. And apparently there is this app that is basically an exchange for these Nike Air Jordan sneakers. And so Nike, although they have nothing to do with the exchange at all, right? They are constantly putting out limited editions of new different types of shoes. And my husband always gets excited and he has to enter all these crazy lotteries and line up at 5 o'clock in the morning to get these limited edition shoes. He buys them. Usually he wants to keep them for himself, right? Because you wear it and it looks really cool and you show it off. But sometimes he will actually sell it on exchange. He will make a profit, right? But at the end of the day, Nike is not involved. Nike is not necessarily pushing people to do this. And ultimately, people are ultimately trying to get their hands on these shoes because they want to wear them because they're so cool, right? So there's an exchange there. It's a private exchange. It's not, it's not an official Nike exchange or anything like that. But there's some sort of utility use, right? These shoes are not considered securities. And I always think that's a really good analogy. We get all into this mind frame about decentralization and tokens and all this stuff, but really you see examples of this in the real world.
No, you're absolutely right. I think the difference is that most of these utilities don't have much utility, right? Because at the end of the day, we all wear shoes, and we know that Nike didn't send you a coin that says this is a shoe on it, right? And then you don't actually have a shoe. It's like a pretend shoe. It's not like a picture of a shoe. It's an actual shoe.
Quick question then, follow-up question for the lawyers on the panel. Is that sort of where the bar is then, where a utility could become a security if the company itself is trying to get the utility listed on an exchange versus the community trying to get it listed on the exchange?
Not from my perspective. It's going to depend how the company sells it, regardless of that exchange. I mean, might be a relevant portion of it, but I think it's going to depend on kind of the whole picture.
And I think a big, not on from the legal aspect, because Amy and Mark could shoot me down very easily, but there's tons of utilities that make perfect sense to go onto an exchange from a community perspective, right? Like the best, probably one of the best use cases for utility tokens are rewards and stuff, right? So if I have Starbucks points on my app, if they switch to a blockchain type of reward system, and I could trade between Starbucks tokens and Target tokens or Coffee Bean tokens or McDonald's tokens. Wouldn't it be nice to be able to go onto an exchange where somebody else wants McDonald's tokens? I don't want my McDonald's tokens. We trade them and now we both are happy. That doesn't mean it's an investment opportunity or a security in any way, as far as I know. You're just swapping rewards. You know, that's how I feel. How I feel and what's legal is very different sometimes. So you guys could tell us. But let's try to get into some more of these questions because we've got a bunch pending. And I'm going to start at the top because this is a bit not exactly on this topic. And I know that towards the bottom, the questions are more related to what we're talking this moment, but I don't want to lose some of these, especially some of the people who came on early and asked questions. So Ryan had a good question. He basically said he'd like to hear about the possibility or challenges of security tokens incorporating privacy protocols. If you guys have any feelings about that, but I'll take it a step further and just, you know, your thoughts on privacy versus, and there's also another question about, do security tokens need to be on public blockchains? Can they be on private blockchains? So I'd like to kind of think about those things, privacy in the security token space. Anybody have feelings there?
That's a really interesting question because it makes me think of dark pools and, you know, sort of places outside of the public markets where a lot of large asset managers prefer to make their trades so that they don't move the public markets too far in one direction or another. And so using a privacy protocol for something like that could have an interesting use case. The problem is that I don't think it can be 100% private. The regulators are going to need a window into those trades, but maybe there's a way for you to use it to make you know, that trade private from a certain subset of market participants or something like that.
From a technology standpoint, obviously makes sense that all of these things are permissioned type of platforms, right? Like not everyone should know everyone's business. Not everyone needs to know from a legal standpoint. Also, like, you know, how many deals do you work on, Mark, that are totally private that aren't public? Just because something's a security token doesn't mean it's a public company, right? So doesn't mean that if Henry invests in my company, Henry is now forced to have the world publicly know he invested in my company or for me to disclose that publicly, right?
Oh, I want them to know.
Yeah, I mean, look, it's gonna depend in terms of how you're defining privacy. You know, if you think about privacy in the way that we talk about it in the context of crypto generally, that's not going to work with respect to security tokens. I mean, to have completely, truly anonymous transactions, not just pseudo-anonymous, but especially anonymous transactions in a security just doesn't work. Now, if you're talking about privacy in every way except between the security token holder and the issuer, that's something that can maybe work. And frankly, I think that's going to end up being something that some folks focus on. But there's going to have to be a relationship between the issuer and the token holder. And you know, any regulator's kind of view into that security is going to be through that issuer. You know, I've heard about kind of protocols, security token protocols being built that are, you know, basically creating nodes in which, you know, agencies can come in through there. I don't think they need to. The agencies are going to go to the issuer, and the issuer is going to have the answers for the agency. Now, one interesting part is the permissioned ledgers. You know, I think there's some news about, you know, one of the issuance protocols, issuance platforms joining, you know, IBM's incubator and working on, I think, some debt security tokens, which is a super interesting part, all using Hyperledger, which is a permission ledger. And so I think that, that's fascinating. But second, there's definitely at one point going to be a push towards permission ledgers. The question is, how does that work with the goal of creating liquidity? I think there's going to be certain situations in which having a permission ledger for certain type of securities that I haven't thought through might make sense. But generally speaking, part of the goal is increased liquidity the more open we can make it with the least restrictions, but restrictions that comply with laws, the better it is. And a permission ledger does not achieve that goal. So I think the public ledger makes the most sense.
Sure, but I mean,
I'm going to disagree. You know, there's a lot of regulations out there that, what do you call it? That call for disclosures of certain things. But the one thing that we know, and this comes from the crowdfunding space, this comes from the history of capital markets, is that private companies like to keep their information private, right? And I guess a lot of this depends on what is the future of security tokens. Is this public companies only? Is it private and public companies? All this stuff. But I think it's ultimately going to end up being much, much easier to achieve an ecosystem in which we've got private permission ledgers for security tokens than public ones.
So I totally, I think that it's easier in a lot of respects. So something that I really like, I like about like cap table management software, which is this kind of weird nerdy thing that I really like to look at, because they're all really, really different, and the way companies structure themselves are all really different too. And it kind of sucks in a way for a lot of people. So if you work at a company, you might have a certain kind of share, and then an investor has another kind of share, and in another round, an investor might have another kind of share. And there really isn't a way for employees of companies to fully understand what might happen if a company sells for a certain price, for example, or if a company goes public. The kind of the employees of the company almost find out after the fact, because they might not know that somebody in a certain round of funding has certain kind of liquidity preferences and whatever, like the whole waterfall of how people get paid. With something like this, and especially with permissions, because certain people might not want to know exactly who's involved, might not want to know certain details. But for example, an investor might not know, an investor probably should know, but let's say one shareholder might not know exactly how much another shareholder owns or what they were exactly promised, but they might be able to at least know with certain software like this what they actually own, right? Like if the company sells for a certain price, I want to know what my exit will be. And if they raise money at a certain valuation, how does that change that? How do I get diluted? And all of these things now can be automated and made really simple with technology, but I think that this creates more confidence or something like that. And from a private standpoint, it seems easier to implement than from a public standpoint, I would think. I'm kind of rambling. What do you guys feel about that? And I'm going totally against what I said about going through the questions fast.
I think that a lot of the current software that is being used for security tokens on public blockchains are providing that service and are creating that permissioned aspect that I think Amy is talking about, and that you get that privacy, you get that information that you get the exchange of information all privately in the software that is being provided by a lot of these security token protocols. So that is all happening off chain. Now, whether it's better that it happens on chain, I guess different story, but essentially what we're having is the trading all happening on a public ledger, and then all the, let's call it management, corporate governance, and all that essentially happening on, off chain in some software. Now, there's obviously things like certain aspects of corporate governance voting that should probably be moved on chain, things like that. But I think that'll happen with time. But for now, I think we're achieving those goals through this software being used.
So I'm gonna let's try and be a little quick now. We've got less than 15 minutes left, and there's a few very similar questions, but I'm gonna start with on these couple questions more on the technology side, since we just brought that up. One quick one. what are your thoughts on Polymath platform and their ERC 1400 open standard? Has anybody looked that up? Henry just joined us again, but that's Paul's face. Paul. I saw Paul for a second. I think you used Henry's link to join in. I'm going to kick you off the thing, but on the thing here, but you'll be able to still participate on the thing. I put hide non-video. Perfect. But what up, Paul? Way to ruin everything. Okay, so ERC 1400 open standard. As far as I know, all of these standards and stuff, really quickly, have any of them actually been implemented other than ERC 20 being traded, or are they just concepts? Do any of you guys know specifically?
Well, I think Securitize's DS protocol has been implemented in a couple different tokens, and I think that most of the tokens that are trading now, like BCAP, are on Securitize's DS.
Does anybody have specific thoughts on Polymath? I've read their open standard before, but it's been a little bit and I can't really give a credible response, but I promise by the next time I do this, which hopefully will be next week, I'll have more specific thoughts.
Yeah, so
I mean,
go ahead, Amy.
Please. Well, the only thing I was going to say is, you know, a year and a half ago, we were all hearing a lot about Polymath, and lately they've been very, very quiet. My personal thing about standards is it's not a standard unless, you know, a lot of people or a vast majority of people are using it. So everyone in the crypto community loves to write standards, but it's not a standard until it's been adopted through actual usage as opposed to just putting something out there.
Yeah, to be fair, I think they have a lot of people who, oh no, I'm looking at ST20, hold on. Anyway, if I remember correctly, they had a lot of partners lined up with them to work on it. And I think they are being a little quieter lately, which might mean they're getting shit done. So we'll all find out soon.
I think this will answer also one of the questions. I think rather than answering Polymath specifically, the question is how do you actually evaluate these different platforms, which,
yes,
you know, hard between, right, an issuance platform versus the protocol that's going to govern compliance in the token. Most of these platforms are doing both of those things. And so when you evaluate these, whether it's Polymath or Securrency or Securitize, you know, or any of the many other ones that exist now, you know, you want to weigh. So you want to get an attorney who's going to understand this well enough to tell you, does that protocol actually work to ensure that you're going to comply with applicable laws, not just securities laws, but all laws? Because bottom line is this is software being provided to you, and like pretty much all software, you're on the hook for it unless there's some massive issue with that software. And so you need to make sure that that actually works. Second, you want to evaluate what impact does it have on liquidity? So there's no doubt that there's going to be a potential for increased liquidity just by going ahead and tokenizing it. But now when you evaluate these different standards and platforms, the question is, which ones provide for the most potential liquidity? So let's just take what Securrency says it does. It claims that it's interoperable across different blockchains. And it doesn't whitelist wallets. So let's just, and I'm not evaluating, just saying, let's say that Securrency works that way. It doesn't need to whitelist wallets, but can still ensure compliance with securities laws, and it's totally interoperable across blockchains. That's probably going to permit for greater liquidity than you get on the other protocols that are whitelisting wallets and that aren't interoperable. So those are, I think, two important things that you want to evaluate. And then you also want to evaluate, frankly, is are they going to be around for a while? What are they doing with your data? What information do you actually have access to? If for some reason they go away, what procedures do they have in place to ensure that you actually still have control of some of that off-chain information that I talked about earlier? All those kind of things are things that you want to evaluate and look at Polymath, Securitize, Securrency, and Harbor and all of them, and say, okay, when I evaluate which of those, which ones makes the most sense? And then you can choose whether Polymath is the right choice or somebody else.
Also, for anybody looking for a really great overview, one of my favorites is Atomic Capital put out some basically an analysis of all the different ones called State of the Standards. So if anybody wants to get deeper into this, I highly recommend going and checking out that post.
Cool. Yeah, I'm gonna try to get into some more questions here, but really, a bunch of people are asking for sort of state of the space and timing on when it will go mainstream, and then liquidity and things like that. Amy, give us a prediction. I want Amy a prediction from the standard company space, and Henry, what's your prediction on the real estate side?
Yeah, so I think it's going to take several more years for it to become mainstream and get to that tipping point. I think we need the institutions to adopt it in order for it to become more mainstream. And I think my favorite quote was the one that Henry said at the meetup, which is, I think 2019 is going to be the year that everyone realizes it's going to take more years.
That was the #1 most tweeted thing about that panel. The only certainty is uncertainty.
Yeah, well, I'm glad people like that, because it sort of indicated to me that people are coming on board with the idea that this isn't just a market where boom, there's going to be liquidity, boom, you're going to raise a bunch of money. We're going to have to keep working at this, but there is a ton of potential here, and it's a really exciting market, and it has a lot of it just adds a lot of value to illiquid securities and illiquid positions. And on the real estate side, we are working really hard to continue educating not only institutional investors, but also the institutional infrastructure providers on the real estate side to get them more invested in this technology and this economy. Because from our perspective, the tools to access security tokenized investments, especially on the real estate side, we cannot have basically a vertical by which traditional investors access traditional investments, and then a completely separate vertical by which they access tokenized investments. We need those gateways to take both traditional and tokenized investments so that the experience for those more institutional investors, the big liquidity providers, is almost seamless.
Love it. Yeah, I mean, I want to throw out there too. I'm reading a question somebody asked. It goes along some of these lines, because we just talked about it before. How can people rely on STO issuing platforms such as Securrency, Polymath, all those, if any of them go bankrupt, or you would lose compliance and trading restrictions would not be enforced? I'll throw out there that there's plenty of service providers in the public market space or in the private space that go out of business. It doesn't mean all of a sudden that hell breaks loose and people are throwing shares out of windows of skyscrapers and nobody's tracking it. That still wouldn't be legal, and it still wouldn't make sense. So just because one of those platforms go out of business, that's one of the reasons that Marc said you have to pay attention to who you're hiring. There has to be a process if somebody does go out of business to continue.
And we saw that. We saw those types of issues get solved with BCAP, with St. Regis, with Science. Each of their tokens migrated onto a completely different token protocol.
Yeah, I mean, in the real world, people change service providers all the time. You might change a transfer agent for a public company, or you might hire a new attorney, or you might hire a new technology provider. So it's very similar to that.
Yeah.
A lot of the protocols, from what I understand, and this is something that's being articulated, I know at least by Open Finance, I'm not sure by the other exchanges, is they're requiring the protocol architecture be such that they're not actually putting a lot of stuff into the smart contract itself. It's more like an arrow. Right now you have an arrow pointing to this smart contract, and to the extent that company goes becomes bankrupt, or if they decide to go with a different protocol provider, the arrow just points to a different smart contract, so that everything ends up being a lot more fluid.
Yep. And I'm gonna really quickly, because we gotta end soon, and I want to ask everyone where to follow them and everything. I'm just gonna add, Wesley, you asked earlier about us talking about the the SEC, and then you asked about ATSs, and you said, what about, globally and everything? And I think all of us hope that this is a step towards a more global and transparent and frictionless, world, right? I think that's part of why at least I'm in it and why most of us are. I'll have the next one will probably be with Ami Ben David from Spice VC and Onera, and we'll talk a lot about global. And I'll actually try to find some more guests where international companies doing this. There's a lot. We'll probably have at least a couple panels at STS dedicated to that. So I know I'm not really answering, but I'm telling you there is a lot in the works there. So everyone, quickly give us 30 seconds of where to follow you and find you. Because I'm just going again the list. Henry, you go first.
Yeah, LinkedIn is the best place to find me. And then on Twitter, I'm actually a recent convert to Twitter, and really fascinating discussions over there that suck up tons of my time. And then I'm on Telegram as well at Henry-Elder.
Amy.
Yeah, sure. Best place to follow me is also LinkedIn. I'm just Amy Y1 WAN. You can also follow my company Sagewise. You can follow Security Token Academy, which has a fantastic Telegram group, and we're on basically all the social media channels.
And Mark?
Yeah, so you could find me on LinkedIn, just type in my name, or Twitter. My handle's at Boiron Attorney. You can find me on Telegram as well at Marc Boiron.
I forgot to say my Twitter handle, I realized, which is at TokenizedCRE.
Tokenized CRE. And everyone connect with me on LinkedIn or on Twitter. It's Alon Goren, securitytokensummit.com or CIS.LA for the events. Thank you so much. I'm sorry we didn't answer all the questions, but I promise we'll do this more often. You can reach out to us individually, or I'll try to actually make a post, like a blog post with some basic responses to some of these answers too, because you guys have great questions. Thank you.
Alon, I was going to ask you, could you post on your channel? We can maybe, some of us can type up some answers to some of these questions and post it on your LinkedIn, Telegram, wherever.
Heck yeah, let's do it. Yeah, we can do this is what I'm going to do, everyone. And now we're putting Henry, Mark, and Amy to work with us. And I'll create a Google sheet after this between the four of us. We'll put the questions in, and we can all chime in a little bit. We'll make it a blog post on the STS blog or on my LinkedIn or something, or we'll all share it somehow. So thank you guys, everyone. Thank you, of course, Henry, Amy, and Mark for joining us today, but thank everyone else as well for participating and asking so many great questions. And we'll do it again soon. Yeah, give me ideas. Security tokens uncensored, security tokens no filter. I like all of those. So let's do it. Thank you, everyone.
See y'all.
Thank you.
Bye.